Time for the market report. Prices rebounding as fast as they fell.
Indeed, and that may become the new normal, but we're going to look into some other factors as well. But first, the numbers. What were the week's biggest gains and losses? And then this month's WASDE report. What did it have to say? And finally, another perspective on the current market situation, especially in row crops. What are the analysts talking about? So, markets closed the week on the upswing, row crops on the upswing, while livestock split. Let's take a look. The week's biggest gain, soybeans, up nearly 67 cents, almost a 7% increase from the previous week. The week's biggest loss, sugar, down about a penny, nearly a 5.5% decrease from the previous week. So, this month's WASDE report dropped and didn't really tell us too much, but what it did have to say was pretty interesting, especially on the global front. Supplies in flux, as it were, but production looking like we're in for a big push. Bella Bingham has the details.
U.S. wheat supplies are projected to be up by 10 million bushels due to higher imports. Consumption is forecast lower, mostly on seed use, while food and residual use are unchanged. Exports expected lower by 15 million bushels, price unchanged at $5.50 per bushel. Global wheat also lowered a bit, a little less than 1 million tons, and consumption down too, mostly due to less use by India and China. Trade expected lower as well, mostly on lesser exports from Russia, Australia, and the EU. Ending stocks up about 0.5 million tons. U.S. corn feed and residual use cut by 25 million bushels due to disappearance, which is normally crop failure, abandonment, disease, or other similar issues. Exports, however, looking up by about 100 million bushels. Ending stocks down 75 million bushels. Price $4.35 per bushel. Global corn production up mostly in the EU, Tanzania, and Honduras. Both exports and imports are raised, while ending stocks down slightly by a little over 1 million tons. U.S. rice supplies slightly down, while domestic and residual use up. Exports reduced mostly on long grain rice, while medium and short grain faring better. Due to these factors, ending stocks down 2.5 million tons. Price unchanged from last month. Global rice supplies, trade, consumption, and ending stocks all up, in large part due to India producing a record crop, now making them the world's leading rice grower for the first time over China. U.S. soybean crush up due to meal use and exports. Oil use for biofuel lowered for now, but expected to increase in the latter half of the year due to tariffs, causing less imports of other biofuel feedstocks. Price unchanged at $9.95 per bushel. Global soybean stocks up due to high crop output in Brazil last year, while production this year slightly down due to lesser output from Bolivia, Brazil's neighbor. Due to already high stocks, meal consumption is up. Exports also up along with ending stocks. U.S. pork production lowered on lessening slaughter and weights, while beef production slightly up on heavier dressed weights and slaughter. Broiler production also up, while turkey and egg production down due to hatchery data and less layers respectively. Milk production looking up due to increasing cow inventories and milk output. Both imports and exports down. Prices for butter, cheese, non-fat dry milk, and whey lowered due to increasing supplies, projected at $21.10 per hundredweight. U.S. cotton shows little changes from last month, save for a 100,000 bale reduction in exports and an increase in ending stocks. Price remains unchanged at 63 cents per pound. Global cotton production down by 520,000 bales. Imports also down along with exports. Stocks overall are up, with the largest increases in China, Australia, Brazil, Egypt, and the U.S.
So we've seen prices on a roller coaster recently. Tariffs a big reason for that, but there's also long-term issues that affect prices, especially futures. Market analyst Chris Robinson gives us a little inside baseball from the floor.
We always know that if you're a farmer or producer, you're always basically a net long speculator. So you're like the person back in the floor that would get up there in the morning, buy a 20 lot in beans, and then go do something and come back at the end of the day and did he make or lose money? You're always long. So you always have to defend the bottom. And risk managers, that's rule number one, defend the revenue. So luckily, if people had defensive positions on, those worked, meaning that they gained value as the price went down. The key was the whipsaw we saw back. You mentioned soybeans. And soybeans was probably the biggest concern because China, big secret, doesn't really take a lot of corn or a lot of wheat from us. It's all beans. They take 25% of our crop. And they were already all done with their old crop sales. And this is usually the time of year they sit on their hands for new crop because everything's coming up from South America anyhow. So the real risk is November 25. And that broke severely. We're at 65 cents lower in 3 days. But then as soon as the first wave of tariff concerns was over, we came right back up. So that's something we haven't seen in a long, long time, a $1.25 swing like that. And I don't care who you are, if you're out of position or if you're not hedged, it makes it very, very, very difficult. It also made it very, very difficult. We had some hedge options on that we paid 10 cents for that were worth 40 cents. And they're like, well, I don't want to sell them because what if we drop another $1? So that was a real busy week of managing those positions. Don't make an emotional sale. Don't get upset. Don't sell unless you absolutely have to. If your banker's like, hey, you need cash flow, then you have to sell. But if you can avoid selling for emotional reasons, always do that.
And that's it for a deeper look into the markets.